Hello guys, welcome to everyone. It's Sunday, November 20th, 2016, and we're going to take a look at the market for the week ending November 18th, last week. Before we do that, let's take a look at the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. This is not investment advice. Let's begin by taking a look at the monthly chart of the S&P. So here's the monthly chart of the S&P 500 that we usually look at. Nothing much has changed here for the past week or so. We can see that parabolic is still below the most recent bar, this month's bar. We are now closing closer to the high though, which is encouraging for the bullish perspective. MACD is hugging that zero line as it has been doing for some weeks now, some months actually. And at the bottom of the chart, Elder Force broke through this small downtrend here. So it's closing above. It's above the downtrend that we had recently in Elder Force. So that's very encouraging from a bullish perspective too. So all in all, the bullish monthly chart remains intact. So let's take a look at a weekly chart. Here's a weekly chart of the S&P 500. We've seen this one many times before. I usually use it every weekend. And by the way, I changed the background back to green because I got some good advice on that the black background doesn't show up these dots, for example, as well as the green background. I had played with this some time ago, and that's why I ended up using the green background here, the light green background. Anyway, let's take a look at the chart here. The instantaneous trend line is slightly above the Kalman filter. It looks as though we're going to break above it pretty soon, perhaps this coming week. Reason for that is we are hitting the parabolic here. This bar is touching the parabolic, or the parabolic yellow dot is within this bar or candlestick. Consider the high of the bar is up here, so parabolic is within that. We should find parabolic once again below the most recent bar, and that would be confirmation that we have a turnaround here from a downtrend that began some weeks ago, and we have this nice bullish bar since then. So it looks as though we're in the midst of a turnaround. The big question though remains, as it has been for a number of weeks now, whether or not we could break above the high here. I think it's 2193. So, if we are going to be stuck in this trading range, then it's likely that we find a line here as support and a line here as resistance. So we still have this 2100 support line, 2193, approximately 100 points on the S&P, as resistance. If we break above 2193 and close above it a couple of times at least, then we might have some more confirmation. We'll have some more confirmation that we are in the midst of a new trend, a new uptrend. But so far, we're in this trading range. Well, let's take a look at percent R. Percent R with a 30 period just bounced off the 50% line and is now above 80%. So that's indicating that momentum is pretty strong to the upside. Of course, we could see it here with these two bullish bars last 2 weeks. RSI 12, which is a very good measure on the weekly chart of an uptrend, since it broke above 40%, remained above it, confirming this uptrend here, and bounced off of the 40% line at the same time that percent R bounced off of their 50% line. So we do have this support here at the 40% line, it seems. And if we look at the bottom of the chart, MACD is now trending up from below the zero line. And remember, as Alex discusses in his books, This is one of the best times to be entering a stock or an index if you're buying the index or the stock when you have an uptrend of the histogram from below the zero line. So this looks as though it's going to give us some more information this week, but it looks as though we could very well break above that resistance level of 2193. Of course, to be determined. Let's take a look at our daily chart. Here's the 930 chart we usually look at for the daily S&P, and we can see in the last 2 weeks this thing has trended up. The S&P on the daily chart, of course, we know that. 2 weeks ago on Friday, we had this inverse hammer here, and it really was a doji that signaled that the bears were exhausted or that there is some more uncertainty. Since then, of course, we've had this run up here with some nice wide-ranging bars and parabolic dropped below the current bars. So the uptrend is being observed here on the daily chart as well. We notice that the 9 EMA crossed above the 30 here, although it started trending up way back here. And it's now above the 90 weighted moving average. So it looks as though we have a shot at breaking out of this range between 2100, approximately 2100 and 2193. So we'll see what happens. But do we have a good shot at doing that? RSI 12 is now above the 60% line. So that's indicating this uptrend here. It's usually more powerful on the weekly chart, but RSI 12 is showing some bullishness. Williams Pro Buying Indicator bumped off of this downtrend as we saw last week. It bumped off of this downtrend here, which is a trend line of the descending highs, lower and lower highs, and now it's back up above, 4%, 5%, or whatever it is here. I think it's 4%. So that's looking pretty bullish too, that there's money coming into the market. Percent R at the bottom of the chart, we can see again, just as we saw on the weekly chart, that's above the 80% line. So this chart is also looking pretty bullish. So and the big question is, do we fall back from the support, from the resistance line at about 2193 or so? We'll determine that later on, of course. Let's take a look at something else. Let's turn to the NASDAQ composite, and we have here a weekly chart of the NASDAQ composite. First thing we notice is the Kalman filter still above the instantaneous trend line, indicating the trend is up. This trend that started back here in March is still up, okay? Now, another thing to notice is that we have the parabolic being hit by last week's bar. You can see the yellow dot right here if you look carefully. So that is likely to now reverse this short up downtrend here to an uptrend. And if that's the case, we are likely to break above the resistance levels on the S&P and the NASDAQ. So we wait to see how that plays out. However, we also have, and in concert with that, we have an ascending triangle. See this horizontal line connecting these highs, these three highs here, and an ascending line here giving us an ascending triangle. That's a bullish indication when it comes at the end of an uptrend, at the top of an uptrend. So it looks as though we are likely to go higher. We'll see how that develops. RSI 12 down here in the middle of the chart is still above the 40% line, as it has been since it crossed here with this beginning of the uptrend on the NASDAQ composite, and we saw it on the S&P as well. It's now sitting just below the 60% line. Actually slightly above, it's 60.10, and MACD below here is trending up from below the zero line. So all in all, these weekly charts of the NASDAQ and the S&P look as though they're at a critical point, ready to make a move, perhaps to break above the resistance levels that we have identified. So let's take a look at something else. We take a quick look at the weekly chart of SSO, which I trade. Instead of doing the S&P, the spider, I would trade the SSO to get a little more leverage, twice the leverage. And here we have a zero line reject. You see, the CCI did not stay below the zero line for more than 4 bars. 1, 2, 3, 4 bars. And now it's above the zero line, so it's now entered uptrend territory. And that is also showing us up here. We see that parabolic being hit by the most recent bar, which we saw on the S&P, of course. And it looks as though we might continue to go higher here, as I mentioned before. Let's take a look at another chart. And a look at the S&P daily, which shows us the volatility index, or the VIX. And remember I mentioned that when the VIX gets to these levels, elevated levels here, it's not a leading indicator, but when VIX starts to come down, it's correlated with an uptrend here. It's inversely correlated with an uptrend in the S&P. And it's one of the best times to be entering the market. And sure enough, we had this nice uptrend in the last couple of weeks. We are now at about 13, and therefore risk on. So people, the investors are going back into stocks, it would indicate. All right, let's take a look at something. Here's a daily chart of the NASDAQ that I tend to look at in order to know if I should trade the QQQs, either the standard QQQ or the TQQQ to get the leverage, the Direction QQQ. So now we have a buy signal on the NASDAQ here. It is my opinion that even though because we've had this run up here and we're at the top of the top Bollinger Band, we're likely to see a temporary pullback. But there's no doubt this thing is in a nice uptrend. You can see the Kalman filter way above the instantaneous trend line. Let's stop and look at something else. Here's a quick look at stock charts, weekly chart with the impulse bars, red, green, and blue. And we can see the weekly chart of the S&P is now green. It's been green last week as well. And we have nice volume here on that. And we can see the uptrend of MACD here. And much of what we saw before with Williams percentile with a 30-day period above the 20% line, indicating momentum is strong. So we have a green bar on the daily chart, and on the weekly chart rather, and on the daily chart, let's see what we have. We have a blue bar, but we're allowed to go either long or short, and since the weekly chart is green, I think the preponderance of evidence is that we're likely to go further up. In other words, the weekly chart is more of the longer term trend, let's face it. Let's take a look at a different chart here. Here's a chart we've seen before. Haven't seen it recently, but I want to take a look. What it is the percent of stocks above the 200-day moving average of the S&P 100. The percentage of stocks in the S&P 100. So what we have here is 68% at the current time. 68% of the S&P 100 sitting above the 200-day moving average. Now, from what I've read about this indicator, as long as we sit above 50, we're pretty much in an uptrend. And we can see that that's where it broke above 50 back in March. At the same time, we saw on other charts when the uptrend was confirmed by other indicators. And so now we still have 68% of stocks in the S&P 100 above the 200-day moving average, which is just fine and bullish. So the trend is confirming the trend. Let's take a look at something else. And one last thing I want to look at is the relationship between the Dow Industrials and the Dow Transports to see if Dow theory is giving us any information. And of course, what we can see here is that the Dow, with using the DIA as the ETF for the Dow, is making new highs on the weekly chart. What do we find on the and here's a chart of Dow Transports, the ETF IYT of the transports, and it's also making new highs. So Dow Transports confirming the uptrend of the Dow Industrials. Also, didn't take a look at the other chart, but we are above 70% now, a score of 70 on the scooter from stock charts. So this is all very bullish. Have a nice weekend. Going to take a look at football, and we'll try to do this again next week. All in all, I think we're going higher from here. So have a nice weekend.